just
Okay.
being patient, you know. So
Yeah, so tonight we'll go over the how to save a bad trade strategy again, just to kind of clarify it, and then we'll go over the volume profile that I've been using. Today it was pretty much on point. And then let's see what else. And then also I wanna ask you guys about changing the schedule instead of 9 p.m. to possibly 7 p.m. if that works for everybody. All right. So as far as today, like what were you guys green or red? How many of you guys were profitable?
I was red by $24.
Dang, that's something to celebrate about, man. Minimizing your
Yeah,
losses.
yeah. I was way more red than that, but I got myself out of it. So I'm fine with $24 loss.
Good, good. Well, let's talk about that for a little bit. So what happened exactly with your trades to start off with, being red, and what'd you do to get out of it?
I mean, this morning, pretty much like I was just wrong on a trade. So and I didn't let it go like 30%, but I let it go a little bit to see if it would come back down or if it would correct or whatever the case might be. But and then I just re-entered at a new spot that seemed, I guess, logical at that point, and then uh, just wrote it up slight, not very far. It could have gone further, honestly, but the market was so slow that and so like it seemed to be choppy back and forth within a range, which I guess I should have traded that range now that I think about it. But uh, yeah, that one trade just got me out of my one bad trade, and I really didn't make any trades after that.
Now, were you long bias, short bias, or what was your market read?
Honestly, like my my market read was probably not not short bias, but long bias for sure.
Okay,
But it just today just seemed to be just simply just like back and forth, just chopping in a range.
right. Which stock was that you were trading?
And I traded uh let me go back. I can't even remember.
Was it SPY, SPX, or Tesla?
It was Spy and Apple.
SPY and Apple. Okay.
Oh yeah.
And which one the particular trade did you had to dig yourself out of a hole?
So I traded Facebook, Mastercard, Nvidia, Spy, and Tesla. But Spy is the one that went against me.
Mm-hmm.
And then, yep. And then uh, I just entered at a different spot on Spy for that trade to go correctly.
Gotcha.
Yep.
Yeah, on the SPY trade this morning, it was actually pretty good because my entry, so kind of walk you through my entry of the trade, made about a 50%, 54% trade. So this was my my initial boxing. We talked about boxing, right? So above that level right there, that's where, well, actually that was a gap up. Hang on. Let's see, which one was it? That was a gap up, actually. I think it was this dip right here. The reason being is on the 30 minute. So let's look at the 30 minute here. There we go. So the 30 minute, when it ran up right here. Let's see, remove this. So when this first green candle ran up, basically it was above the 200-day moving average right here, which is another indicator that you guys should put in your charts because the 200-day moving average is a pretty strong support or resistance depending on which side you're in, right? And so when the SPY dropped down to here, I bought that dip, and if you draw the line as well, in this level, let's see, 444, and you go look left, like 444 level right here, right? So let's draw the line here. So you can see right here was the support, and there was layers and layers of support confirmation right here. That when it got to that level, it shot up, right? So that was my little quick little scalp analysis on that. So hopefully that helps. But as far as the trade, so what'd you do? What'd you do to like save the trade since it was initially wrong?
What was that, TJ? Sorry.
So what was that? What'd you do the first initial trade? Did you like double down or like how did you manage to dig yourself out of a hole?
I just took my loss, got out, and then simply just entered at another spot.
Okay. So that's
Yep.
that's a good point. So you respected your loss, your position, and accepted that, you were
Yep.
wrong, right? You didn't try to fight it, and then obviously you kept composed to wait for another setup. And then when you took that next trade, did you size up a little bit bigger compared to the last trade, or how did you approach that?
I sized the same. I just used the same contract size.
Okay,
Yeah, I didn't size up or down at all.
okay. So that's good. So you took a couple trades to make it back to green or almost green today. So
Yep.
that's good. All right, so that's a good lesson to really pay attention to. What you said there is when the trade when the trade was going wrong against you, you just cut your losses and just pretty much sat on the sideline instead of thinking and hoping that it's gonna go my way, it's gonna go my way, and I'll make my money back, right? Because that's the typical conversation in the trader's head when a trade starts going against you. Okay. A good example is um, he's not here today, but it was Alex. 10 minutes before the closing bell, he was on a bad trade on SPX, and basically, I was actually still in front of my computer. I was just doing some work, but I happened to hop on because the stock was getting pretty volatile on towards the closing, right? It was right here. So let me turn on the after hour so you can see what was happening. So on SPX, this was a good example. So right here, um, I think he had a put trade like right around this level right here. And he was actually winning. He was coming down, right? And then for some reason, like 10 minutes before the close, or actually that's 20 minutes before the close, it started ripping. And so right at this level, he was down like around, $4,000. And I happened to hop on right at this clock hours. And he was basically asking, "Hey, what should I do? What should I do?" And I don't know what to do, like um, just losing composure, right? And I was like, "Well, here's what I would do." So first thing you would do is like go zoom out, right? So I jumped on the hourly. Okay. So he was trading SPX, but SPX doesn't have after hours, so we looked at the SPY. So basically, I was like, look at the after hours, or not the after hours, but look left, right? So I drew this line again, and then finding confirmation to why I need to stick in the trade. I'm gonna change this color so you guys can see it better. Let's make that blue. Okay. So based on that, I can see that this level rejected, and then we have a hard ceiling right here, right? Hard ceiling, right in this level right here. Okay. So based on what I saw, zoom back into the 1 minute, and I was like, well, you see the purple line right here, and he was already about four options contract right here, right? And SPX is pretty expensive, especially he had a Friday expiration contract, and he asked me, what should I do? Should I cut it? Should I cut it? I was like, well, you're gonna cut it at the top. If you do that, let it let it play out, and then once you see another red candle, that means it's respecting this level. And then we're seeing wicks at the top over here, right? We talked about key level resistance or support. You want to see wicks at the top or wicks at the bottom, depending what kind of trade you're looking for. So in this case, we're looking to go, you want the stocks to go down. And we started seeing these wicks like immediately right at this level after we put this line in. And right at this very next red candle, I said, okay, double down. So he doubled down that position and it was enough. And SPX, he didn't know this either. If you guys don't know this, On SPX, SPY, and Triple Q, on options, you can trade 15 minutes after the bell. So you still have 15 minutes to close or get in on your positions for the following day if you want to do that. So in this case, he didn't know that. I told him like, hey, look, you got 15 minutes after the closing bell to be able to close your trade anyway. That's the reason he was panicking because, the market's closing and he doesn't want to be stuck on a bad trade the following day. I said, well, you have 15 minutes to really see what happens. And so in this case, right after it pulled back right here, I mean, he pretty much sold right around this area right here. Okay. And then why did I tell him to sell right here instead of expecting, oh, hey, you're gonna make more money on the farther down because this is a pullback, right? And here's another tell. So first thing we did was identify the resistance level and then double down on his position, right? Um, with the proper risk, obviously. And based on this, and I didn't even draw this the quadrant line, but based on this level, I can see it just in my head, just by eyeballing, measuring. That's the 50% pullback, right? You see this move from up here to down here, and that's a 50%. And look at exactly where we closed out that position before it bounced up again. Now, instead of hoping that it's going to continue to drop down, the whole goal up here, the whole goal of doubling down up here, right, is to save that trade. You're not looking to like bank and get rich off of it. You're trying to get your capital back instead of losing it. So therefore, the moment he went green like somewhere up here, and then we executed like 8 contracts because he had from 4 to 10. Um, he closed out 8, and then the moment it bounced back up and slammed back down, I said, okay, the 50% is respecting that level. Let's close out the remaining trades. And he ended up only just losing like 120 bucks instead of being down 4 grand up here. Okay, that's a big difference. But that's exactly what I want to emphasize on with everybody, that you know that strategy works so well, and I can stay green for a long time comfortably with that strategy. That's staying composed, identifying, the key support and resistance, and not panicking. And like what John is doing too is, getting out of your bad trades if you like want to get back in at another setup. So in this case, if he had a better control of his emotion, he could have gotten out the moment his entry, like let's say his entry was over here, the moment that broke to the upside with strength, right? We talked about when a candle breaks your resistance levels with volume or like green spikes like this, it's likely to keep going. Okay. And he could have stopped out and wait for another setup. And, obviously looking left, he could have seen this as well. We talked about that many, many times, but obviously emotions will kick in and you will forget to think clearly of what is your what is your process? What is your process? What do you do if the trade starts going against you? What do you do when the trade is going in your direction, right? It's all about profit taking. In this case, when this trade was actually going in our direction, I already had planned to take profits right here. So I can visually see my actions before it even gets there. And that's what I want you guys to really focus on and start practicing. Whenever you're taking a trade, you should have a target price of profit and you should have a target price of taking your losses. Okay? Let's see. Is that making sense so far, everybody?
When you say a target price, you're not saying like a like negative 30%. You're saying an actual point on the current chart that you're looking at.
Correct. Correct. So when I say target price, it's not necessarily a profit number or a strike price. Let's say you have a call on this and your strike price is like, 47 and it's not there yet. Not necessarily. I'm basing it off of, especially as a scalper, you have to base it off like the 1 minute time frame. Okay, the 1 minute time frame. And you have to respect these levels because the 1 minute is telling you, hey, these are its range, and whether you like it or not, it's gonna behave accordingly based on these levels, right? If you're looking at a 5 minute time frame, you have to respect the same levels. You're like, okay, in the 5 minute time frame, it rejected here. The probability of it rejecting at that level is pretty high as well. Or this low side is also gonna probability is gonna bounce. In the middle is random, okay? And that's how I want you guys to think when you're in a trade. And the only way to really keep that in a composed mindset and emotion is just planning, right? Just planning and practicing, okay, if I'm getting in here, where am I getting out? If this trade goes against me, where's my next level to add or to get out? Okay? If you don't have that plan and you're getting in, you got in a trade because you're so excited that, oh, SPY's gonna go up, and then you're in, but you haven't even thought about where am I gonna start taking profit, then you're already behind. You're already behind the trade. Okay? And when it gets there, and this is an example, and this is kind of like picking on, let's see, I'll pick on GN. I'll pick on GN. So on Piton, right? He was, I believe, at one point it was he was puts on it, and this is for lessons purposes. Okay, I'm not talking down to you or anything like that, but just in recap, um, you're mentioning like this trade is going in my direction. What should I do? Well, um, one is to identify key levels, right? So if this was the trade right here, right? So if this was the trade, and I don't know which one it was, but it was coming down pretty good. So if you're looking at the 1 minute or 5 minute, it doesn't really matter which time frame you're looking at, but just know that there's levels of support and resistance, right? So if we draw, let's say right here, this is a support area, okay? So we know if you shorted up here, you should be taking profit right here. You should be taking profit right there because it told you on the chart, whenever it got to that level, it shot up. It shot up. Although this broke down, which is actually this was probably the chart, it kept going down, but the plan to take profit here, you have fully accepted and respected these charts. The more you practice this behavior, the more your confidence on your chart pattern reading. But if you doubted the trade and you got out right here and you're like, oh man, I should have held longer. Well, that's a bad practice because you know by behavior that it was the right thing to do, right? By behavior at that level, it bounced up. It bounced up. So that's a good example that you have to trust your setups and getting in and out because if you constantly doubt your entries and exits because you miss the remaining of the move, right? Then that's you're practicing that doubtful decision making and you won't be able to comfortably trade in and out and your emotions is constantly in play and you'll freeze. Okay, for the same example, what I had to do 10 minutes before the closing bell, stepping in to evaluate what it needs to be done. And you can do the same thing if your emotional state was properly in check and you're in control of it, calm, and identified your levels. Okay, is that making sense?
That's when I talked to you and you made me trim down, and that was the best idea.
Yeah, and the idea was, okay, so you're profitable now. And my question was, if the trade went against you now, would you be happy? And the answer was no. So therefore, lock in your profits, or lock in, like, most of the time when I'm in profits, I sell about 80% of my position. So if I have 10 contracts, I'll sell 8, and I'll let the 2 run. The moment the trade starts to go against me, I'll actually just get rid of those 2 and just save the remaining profits. And guess what? Sometimes the trade does keep going in my direction, but I'm okay with that because I was satisfied to respect my decision to lock in profits, and then the remaining 2 contracts, if it kept going, I was okay with to ride it. But the moment it starts reversing, I was also okay to just, you know what, I can just sell this. The emotional of thinking that, oh man, I could have sold all 10, I could have made more, um, or I should have just, you know, held on. Like, if you're constantly doing that, your doubts is always going to be there. Your doubts is always going to be there because you're not trusting yourself. You're not trusting your decision making. So just practice to just accept it and go, I made my decision there. I'm sticking to it. You know, it's the same, it's the same concept as when you're trying to drive a point with your argument with anybody based on whatever it is. You're sticking to your decision. You're sticking to your point of view. And you have to do the same thing in trading. You have to hold that ground to go, I made that decision and that was the right thing to do. Okay. Okay. So, as far as saving the trade, does everybody understand that concept? I'll go over it again, but I just want to ask you guys. How many of you understand the concept of how to save the trade and doubling down on a bad trade?
Yeah, that makes sense.
Okay. So I'll briefly go over it here. I'll go in a 1 minute since I'm a scalper. Let's just pick a chart. So let's just say um, this level right here. This is a good pattern to really short off of because it's showing weakness, right? So we talked about boxing, and let's just say it did break to the downside right here, and now the you're entered short. Okay, you entered puts on this trade, and what you want to do is, if you believe and you have a high conviction, if you're looking left, and this right here, right, this is pretty much a ceiling, as you can see. So you know within this range is going to be turbulence, or you have a high conviction that it could reverse. So you could add, so let's say if you have, uh, let's say just 2 contracts right here, you could add right over here with 4, and this next downturn would have put you back to green. Okay. If you didn't do that process right there, then you could look left again, right? Which is you can use a lot of different indicators, but I use the volume profile. I know this line right here, this is value area high. So the probability of it rejecting, you can already see what happened at this level. We know that it rejected here, it rejected here. So the probability of it rejecting there is pretty high as well. So you go from 2 contracts to 4, and then you got hopeful that it was going to keep going instead of just the concept of saving your money and breaking even, or even just going green slightly is okay. But let's say you got stubborn and now you have 4 contracts. You can go 8 contracts right here, and then this next pullback right here, right? That would have put you back to green. Or this little pullback probably would have put you back to even right here, right at this level. And let's just say you were still stubborn and you were like, I, I should have done it. I should have did it here. I should have did it here. I should have taken the profit because TJ's keep saying lock in gains and I don't listen. And you have another shot to save yourself. Okay. And let's say this level right here is the peak, right? But you can't identify that by just looking at the hindsight. So now let's look left to have confirmation. Confirmation left. Okay. All right. So the blue line, let's look at the bigger time frame. Let's go in the 15 minutes. Okay. So this is, okay. So we're right here. Okay. So now you look left. Oh man. If somebody can tell me where in this chart that would give me confirmation to add more position for the short side for potential little pullback that can put me back to green. Can somebody find it for me? Don't be afraid to be wrong. Where in this line of this blue line that tells you is going to be a high probability of rejection? Any takers? Is literally like staring at you right in front of your face. Right here. Right here. This guy right here. Okay? That's a ceiling. And then you have literally this guy, this guy, this guy, this guy. This whole top right here told you that is a high probability of it pulling back. You're not looking for a big move, but you're looking for a pullback to your direction. Okay? Now you can zoom in a little more right here in this levels. What do you see here? Okay? There's one more right here. You got pretty close. Okay? And then right here is a ceiling, right? More ceiling right around here. But the cleanest one is the one that I pointed out first. The cleanest ones are these guys right here. All right. So as you can see, that would have gave me a confirmation going from 2, 4, 8. And if you were really, really stubborn, this was your last add. And this last double down from 8 to 16, you should be at about 20% of your account. So meaning if you went from 2, 4, 8, and your eighth, your this ad right here was 20% of your position, that means your initial entry was too big in the first place. That's proper risk management on your account. So just keep that in mind. If you can't double down, and you should have identified these levels. And typically when I add anywhere from 3 to 4. I think 4 max. I'd like if you go more than that, you're really screwed up and you should just, cut your losses. Okay? Like I don't even like to go above three ads, 3 double ups. So I'll go from 2, 4, and then 8. Okay? So I guess 1, 2, 3. So I guess the 10th one, the 16th will be your trade, your third ad, because your first trade is just it's not a double up. Is that making sense? Come on, everybody, wake up.
Yep, that makes sense to me.
Good. Okay. So that's what I wanted to emphasize on. I literally use that strategy every single day. And if you can't process that execution flawlessly yet, that means you just need more practice. More practice, more practice, more practice. You should be practicing your strategies either on demand or just doing it with the smaller positions. Look at it. This is you want to be professional at this, and professional players practice their craft. This is also why I chart every single day. Why I love and force myself to come in here 3 nights a week with everybody to because it's a benefit to me and I'm getting my practice in. Okay. Let's see. Trying to delete all this stuff. I don't want to delete all my support and resistance. And then also, who's currently using the volume profile indicator?
I am, and I had some questions about that.
Okay, so let's go over that.
Um, sorry, did you want me to ask my question?
Yeah, let's go now.
Uh, okay, yeah. So I noticed, like on these points of control or virgin points of control,
Hmm.
that during the day they'll actually move like up or down. So um, I guess my question to you is obviously that's just more where people are or more people are stepping in to buy rather than the previous spot. And then I guess what does it mean like when that like range within the volume profile it like expands? Like what's happening there exactly? And then man, like I know I just kind of we you just shared this weekend. We've only had a couple slow days of trading. How are we supposed to be using those? Because like in my head, I was thinking that not necessarily within one intraday of trading that it would get to like the next virgin point of control or the next point of control period. But I feel like there should be a little bit more range in there, unless it's simply just we've just seen two slow days. So that was a few questions. I hope you got it all, man. Hope
Okay.
you understand.
Yeah, so I'm gonna tag everybody in this video under the educational resources, support and resistance, the easy way to draw supply and demand, part two. So take a look at that. That's the video that really clarifies what I'm about to go over. And so your first question was when you're
What time
watching,
I get in?
yeah, when you're watching this volume profile on the same day, and you're saying it's fluctuating up and down. Yes, because the current day, which is that's what the setting is, right? Your setting is the day, time per profile is day. So it yes, it will that lines your value area high and point of control and value area low is going to fluctuate because it's trying to form its today's values, its today's range. I don't use that too much for the same day. What I rely on is the previous day's range. So
Okay.
in this case, the um, so typically I don't have the pre-market on, so I'm gonna turn it off because that's more accurate way based on that video description. That's how he describes it. So this area right here was the previous day, right? So I would
Yep.
call that my VWAP, virgin point of control. It's a virgin because it has not been touched since the price action is actually higher. Let me see here, epoch, and I'm gonna color that green. So to me, in my trained eyes, I know that if that price action ever drops to that, the probability of it bouncing up is pretty high because this
Mhm.
zone identifies as you see the gray, let's see here, you see this gray
Yep.
graph, okay? You see how it tapers to that green?
Hmm.
So that tells me that's the highest concentration of uh, price action that was long. The reason I say that was long because it obviously told us the following day it shot up. If it would have skipped down, that would have told you clearly that it was a short position accumulation. Okay?
Right there. Boom.
So this was no guessing that this was a bunch of long positions, right? That was not that's not a
Okay.
guess. That's an actual factual because it happened the following day. Now, tomorrow, the same thing what we're looking at here, you see this high concentration of area is the same concept. Now, do we know this is a long or a short? We don't.
We don't know yet.
We don't know yet. But tomorrow, whatever it tells us, it's gonna show either as a gap up or a gap down. If this is a gap down, then I'll know that this was a short accumulation, right? And that's it. And the probability of it coming down to here is pretty high. If it's a short, then I'm gonna buy the heck out of it because you know why? All these people, all these people that bought down here, right? That missed out, they're gonna defend this area, right? So it's the same concept as that what I show as a double down, right? So this trade is basically coming down to build out more position. Another thing to look at, to think of it this way, this is a confirmation. Remember the pattern, right? You got like this, and then this is the W pattern,
Oh,
confirmation.
yep,
We talked about the W pattern, right?
yep.
And this is literally right, was it right here? Right here. Do you guys see that?
The
No, it
streaming.
paused.
Oh, it's paused. Okay, let
It
me
says you
change
minimized your application.
my screen. There we go. You guys see that, right? This is literally the pattern right here. And I saved this screensaver on my this is like my constellation, my screensaver on my computer. This is literally the pattern right here. Okay? If it tests the number 3, this is likely to go up. And then you put this analysis together based on the previous pattern. Literally, you have that pattern forming right here. Boom,
Yep.
down, boom, up, boom, down. If it comes down to this level here or here, it doesn't matter. Remember, it doesn't have to be a perfect W, but just know that if this level doesn't hold, I'm going to add more right here. Okay? And then guess what? If this breaks further down, and then I'm going to stop out. But your average price of entry is going to be within this zone. So therefore, you're not really taking a big loss. Okay? And that's all you have to do. Rinse and repeat that, and you'll be
Times.
highly profitable. I can't manage your emotion, but this is the best way I can explain it. Man, deleting these things are kind of a hassle. Um, okay.
Just hit clear all.
No,
Works.
I don't wanna get rid of my other levels.
Oh,
It took me like forever to like draw that to every single ticker symbol. Oh man. Okay. All right, so that's good. Um, does that make sense, John?
Yeah, I'm. That was great. That definitely like relieved questions that I didn't even know or knew that I had. I guess consciously anyway.
Okay.
So
So the other, what was the other question? I'm trying to remember because I know you said the volume profile area was moving throughout the day, but if it's the same day volume profile that's presenting itself, it will fluctuate that day. But the remaining to the left, like all these ones, will not fluctuate. Okay, that's
okay,
fixed. Those are, in the past. The events has already been figured out that that was these accumulations zone was already been identified.
cool. No, I think you answered all my questions. It helped a lot.
Right on, right on. Okay. Next question. That was a good question, John. I'd like to explain that just to clarify everything. So I guess looking at the upside, using the same volume profile, right? Can anybody tell me what was this accumulation right here? This up here. What was this accumulation?
Be people accumulating short position, yeah.
Okay. Yep. Because that
I
that
mean, based
that
on the rest of the graph going down like that, I mean, obviously someone knew something was happening.
right.
Um,
S-
whether that was just that they read the chart or big money did something or,
mhm. So the chart tells us what had happened, right? That's like answering that question should have been like, oh, dude, 100% that was a short. That's a confident answer because the chart already tells us, right? That's hindsight. And then looking back right here, what was this accumulation right here? More shorts, okay? And then what was this accumulation right here? More shorts. And then right here, it kind of tells us that it pretty much slowed down at this level, okay? Now, if we were trying to figure out why did it slow down right here? Why did it slow down? One thought process is all these shorts are now starting to cover, okay? And then the question is, why are they starting to cover? One, you could think of is them probably thinking that the 200 uh, moving average is going to hold and it's probably going to bounce up. Okay. And then the only way to identify that as well is to go on a bigger time frame. Let's look at it on the daily. Okay. So on the daily, it told you that this is a major support zone right here. That's a block of that's a solid floor. Okay, that's a solid floor. So therefore, right here, like literally right here at the 200-day moving average, um, you could have started accumulating for a push back up. Okay, which if you look back, let's see, what was it? 1 minute. Was it 1 minute or 5 minutes? Okay, 5 minutes. If you look back, it starts to form like this could have been like a kind of like a head and shoulder type deal, right? And then also it told you that the 10 and 20 SMA is starting to flatten out. It did flush back out again, but just knowing that this was a support zone, you could have started. This is accumulation for long. You can tell accumulation for long and short covers because the following day was a gap up. And then you mix that up with news catalyst, it could have given you a good conviction. I literally did this on Facebook. I swung a Facebook call from yesterday. What happened? Let's go to back to pre-market. So right here, okay? So you can see this on Facebook. You can tell that it was accumulation. If you look left, so it was price 218, 218 on a bigger time frame on a daily. So if we look at 218 right here, okay? Oh shoot, what the heck? Okay, 218, it told you that was the support, right? And then from that level on, we knew that it popped up. So if you zoom back in, the pattern was already presenting itself for a push. So right here, right, it's starting to push up. After this big sell-off, we know that there's buyers are coming in, especially towards the end of the day. And then so I took a call right pretty much at the close because we're above the 10 and 20. You see right here, every time like this wicks down here, it told me there was so much buyers coming in. Okay, and we're staying above the 10 and 20 with this basket that we've been talking about. So I took a call position right here, and then I actually try to protect my position by I bought next Friday's contract, not this Friday, but the following Friday, because I had uncertainty of the market still. I wasn't sure if it was gonna hold or not, but based on that conviction, I wanted to take that trade, and it paid out, and I pretty much sold right at the open at the second candle right here. That's it. Rinse and repeat your process. Write down your process, review them. What is your step one? When you sit down in front of your computer, what is your step one, right? If you're sitting down on your desk in the morning and you don't know what your step one is to identify your trades, your entry, right? Then you got to work on that. Like I'm sure B-Mads feels the same way. He's got a process um, of identifying a trade. Why is he taking a trade? How long is he gonna take the trade for? If it moves a certain percentage, he's already got it in his mind that I'm likely to take this profits. B-Mads, can you attest to that? Can't hear me. Does everybody understand the point I'm trying to make here? Is this helping to clarify things?
Just gotta have a
Yep.
Man, you guys are quiet tonight. Everybody sleepy?
It's a market today. Put us all to sleep.
Yeah. I mean, the market was decent.
Market killed me.
The market killed you.
Yeah, $600.
You traded Piton, right?
No,
You traded.
Moderna and Spy. I had puts.
Okay.
They both went up.
So what did you do on your trades when it started going against you? Like what was the thought process?
See, that's the thing. I was cause my process, my stop loss is if I get up to like 50%, I get out of the trade. But I was so busy and I'm doing it on my phone today at work. Forgot about it, and then I was down 60, so I was like, all right, I'm just gonna let it go till I was down 300. Then I was like, I'm done for today.
Mm-hmm.
So yeah, I was down 300 on both. I was just wasn't focused today because I was busy at work. It's hard to do it on your phone.
Mm-hmm. It is.
Yeah.
It is definitely. I mean, I trade on my phone, but I'm in my desk, so I can see all of the charts. Okay. So definitely, as the factor is just emotional, and obviously you're distracted. Okay.
If you're working, just buy more time so it doesn't hurt. If
Yep.
you can't look at your if you can't look at your screen. Like a lot of the things I've been doing lately is I'll just buy in the morning, then I won't look at it till 1.
Yeah, that's a good point. And then also, Brian, I wanted to kind of go over just briefly about the credit spread. Have you messed with that? Because I'm just starting to dive into it.
Yeah, that's how I learned how to trade calls and puts by just doing credit spreads.
And what did you think of it when you were new? And did you feel like
It's
it was beneficial to especially new traders?
um it's obviously a lot easier if we're trying to swing trade because it doesn't hurt as much
Hmm.
and time is on your side. Because remember when you're buying calls, right? You get pissed about time decay.
Hmm.
So this is the opposite. The more it doesn't go the if it's shopping around, then you're taking money.
Hmm.
Phil, right? That's what Phil's been doing. Monday, Wednesday, Friday, he just sells zero DTE credit spreads. The problem is you need more capital because it's in margin.
Hmm.
And if you're below 25K, then you're easily going to get flagged PDT. So you kind of have to just buy and just let it sit until it expires. So it doesn't count against your 1 out of 5 trades.
Yeah. And the beauty thing about spreads too is you can have a small account, but you said, like it still affects the PDT rule because that's a margin kind of trading requirement.
Correct. But there's also I'll show you. Can you pull up an option chain?
Hmm.
So this is actually really cool if you can't afford like let's say Tesla or something, right? Because I mean Tesla's pretty expensive, right? We can all agree.
Let's see.
Chain. So what you were talking about is a credit spread. I can also teach you a debit spread.
Okay. What do you want to pull up?
So you can just do zero DTE to be honest with you.
Yeah, so this is zero
Okay, so
DTE.
so you see how it says you can buy the 446 call, right? It's like $1.91.
Hmm.
So hit control click on there on the ask.
Control.
Okay, and then control click. You have to hold control down. Okay, so on the next one, hit control left click on the bid on the 448 call
448 call. Right here. On the bid side?
on the bid side. Yeah.
Okay. Okay.
can you hit
Yeah, I see
instead
it.
of
I see it down
instead
here.
of oh okay, yeah, see it says right there, right? It's +1 -1.
Yep.
So you know how it was worth $1.91? Now you can buy them for 81 cents each. Because what you're doing is
Okay,
you're
so
buying
typically
one and you're selling one.
the first one you sell, right? The closer to the money you sell.
The first one is you buy.
Oh, the first one is you buy. This is the debit spread, right?
Yes, that's a debit spread.
Yeah.
That's like a directional play, so there's no time decay on the weekly.
Hmm.
But see, like instead of costing $1.91, it only costs cent. The only thing about that is it's capped. So if you hit confirm and send and don't actually send it,
Okay, where
it's
do
gonna
you
pop
see
out.
that again? So
The
it's gonna
price,
yeah, so okay, so I see. So we bought the $1.44
the $1.91,
or
446.
was it $1.91? Okay.
The 446 call, if you look at the option chain, it's
Hmm.
worth $1.91,
Right.
right? And then you're selling the 448, which is $1.08.
Hmm.
So you subtract those together, it becomes 81.
Okay, gotcha. All right,
So you
now.
can load it up on that. And then if you hit confirm, the only thing about that is it's capped, right? So it
Hmm.
will tell you your max profit is 119.
Hmm.
It's $81.
But your max loss is $81.
Yep.
So that's a pretty good risk reward ratio. So in this case, what does SPY need to do? Does it
So
need
it
to
just needs to go up.
it needs to go up to above 448 or just needs to be above 446?
It just needs to be above 446.
Okay,
Because
above.
what happens is if 446 retains its premium at 191 and then 448 loses its premium, you're collecting the premium. It goes back to you.
uh,
So you're basically gonna make dollar
yeah.
and 10.
So what happens if the SPY goes to 450?
Then you're still capped out at 119 because that's your max profit. Because
Hmm.
think about the 448. Anything above that, you're not making any more money.
Gotcha. Kind of washes out.
Correct.
Okay.
But it's a good way to trade those high stocks that you can't usually afford. But if you buy one in the money call and sell out of the money, so like Amazon, instead of paying like 3 grand each, you can pay for like 1,500. Actually, that's
Okay.
a good example.
Yeah,
Actually.
let's pull
Go
up
to
Amazon.
Amazon and do a. Let's just say you wanted to swing trade out. Do like 14 days out because it's
Okay.
probably a 31 because those are not liquid for Amazon.
31. Okay.
So go like kind of out of the money. So like, so if you think Amazon's gonna go to like back to 3,500, so let's just say we'll buy the 3,200 calls, right?
So, okay, 3,200 calls.
And then you can just sell like somewhere far because right now it's 8,000 each, right? So maybe sell like the 3,300, maybe.
So, okay, 3,300 right here.
So hit control and click in the bid.
Yep. I'll click on
So
bid.
just switch that one to minus, bottom one. There you go. So instead of paying 8 grand, you're only gonna pay 3,500.
So I'll do
Hit
confirm.
confirm send. So now your max loss is 3,500, but your max profit is 6,450.
Wow.
So as long as Amazon keeps moving up, you're just gonna keep making money, and there's no time decay on these.
Right. It could go sideways and it's still.
Correct.
Now, okay, so what if Amazon stays below 3,200?
Then you're just gonna lose like a little.
Lose. Okay, so lose all of it.
Yeah.
Because yeah, obviously.
You're not gonna lose all of it. I mean, you're gonna lose all of it at
But
day of expiration, but like not
percentage wise, you can see that coming. Obviously, you can
correct.
cut your losses, but you're
Or
more.
you can do like credit spread. So you do the other way. So when you're doing credit spreads, you want to sell puts because you want the puts to run out of value if you're
Yeah.
bullish in Amazon.
So in this case, you want to do sell the closer to the money, right?
No, you want to do the 30 delta actually.
30
Because
delta.
what the reasoning for selling the 30 delta is because they're out of the money already.
Yeah.
so that every time it moves up, they get decimated faster.
Okay. So let's
So
sell
hit
this guy.
sell the bid,
Sell the bid.
right? Yep, and then you buy like it's up to you. You buy like $10 up, $10 down,
Oh, actually,
even $40.
so it goes 30 delta. Is that right?
Then
Or
sell like the 15.
you sell that.
That's correct.
Okay.
And then buy the 15.
So the 15 delta. Is that what you're saying?
Yeah.
Okay, so fine, 15. There we go. So we'll buy that. So we'll
Switch
put
that one to a plus.
plus.
See, now you're gonna receive 530. Oh yeah, there you go. So your max profit would be 3,300, but you have to put up 15K, 14,000 in margin
In collateral, yeah.
in collateral, correct? However, it should never go that far. You're never gonna see that max.
Yeah,
Obviously,
it's so far out. The probability of it going down that far is pretty low.
correct.
And that's
And
all this game.
if it does, make sure you have a stop out plan. Like let's
Yeah.
just say you're gonna risk $1,500.
So going from 32, 31, 31.20, and if it stays, let's see, where's 30 delta? Right here. As long as it stays above 29.90, you're gonna keep that profit.
Correct.
So there you go. So you have a range. That's a pretty wide range to
Yeah,
stay
like
above.
Amazon would have to like die.
Drop 120 points.
Mhm.
140
And it's the thing
points.
too. If market's going up your way, then those how out of the money calls gets decimated faster, right?
Right.
So if you nail that direction, you're gonna get like 50, 60, 70% of your credit received right away.
Mm-hmm. Right.
I mean, it's just a little bit slower unless you do it Monday, Wednesday, Friday. Like Monday, Wednesday, Friday for SPX is the best.
Mm-hmm.
Phil does it every time.
Yeah, and
So
to be honest, looking into it, that was very attractive. A smaller gains, but your probability of win rate is so much higher.
can you do me a favor? Can you pull up YouTube real fast? I'll show
Okay.
you somebody.
Okay. Where's my YouTube?
Look up Master Trader SPX.
Yeah.
Then
Trade.
type in credit spreads. But these guys are freaking monsters. And they'll show you how. This is kind of how I learned. After I learned from Tasty. These guys.
These guys right here?
Yeah. Fucking beast.
Turn up the volume.
Welcome to
They
Master
sell
Trader, where you learn
weekly
simple market
credit
analysis to make
spreads.
money investing and trading in the markets. I'm Dan Gibby, and in this chart of the week, although at Master Trader we trade both directionally, stock and option trades where multiple time frames are in alignment and we're expecting a big move. We also have
I just wanna fast forward it.
94%
trades, which
profitable.
is the sub.
Yeah.
Our method.
So what they do is they actually
we ask
play
ourselves, what is the
they
likelihood?
play like same thing, candlesticks.
Mm-hmm.
So obviously if you have a candlestick, right, that does a hammer pattern, and then you just sell below those candlesticks like
Mhm.
same week.
Yeah.
And then that's what you do. Like
Yeah,
this one he did.
I have two trades right now on Facebook. I sold I did a credit spread, put credit spread, because obviously I'm bullish on Facebook, and then I also did it on Shop. As you can see, it's that trade is like going pretty well, but
Mhm.
during the whole Shop hours, I stayed green the whole entire time.
Oh yeah, because what it's doing
Yeah.
is it's getting rid of like the theta.
Yeah,
Theta
I'm getting paid on
theta
that
goes
theta.
to you. You get paid on theta. Yeah. But
It's like
so this guy right here is like crazy because if you combine technical analysis, right? See like this Apple, right? If you combine technical analysis with selling credit spreads, then you'll never lose. Like look at this guy, right? 95% win rate. out of 20 trades, you win 19. Like that's crazy, you know?
Yeah. So I'm gonna post this as well, guys, on our main chat. You can
Yeah. And
watch that on your own. But
and
yeah,
honestly, if Phil can do it, anyone can do it. Because Phil doesn't even pay attention anymore.
he doesn't even
Because
know
like,
technical analysis like we do.
I mean, he does, but I mean, like, he'll just sell like the 15 delta, and I don't know,
Make
wait till the end
make
of the
money.
day, just make money. And it could be either side too. It could be in the long side. Obviously, if you're popping higher, higher, higher,
Hmm.
then just sell those 15 deltas to the top. If you're going lower, 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 find the bottom, just sell those 15 deltas at the bottom.
There you go.
And then, yeah. It's easy. So basically Monday, Wednesday, Friday. It's like a sure shot $150 every Monday, Wednesday.
Yeah.
So
All right.
and
Well,
that's
now you guys
on
can.
one contract. On just one contract is a sure shot 150. You can
Right.
just scale in if you really wanted to. You know?
Yeah, I'm definitely testing it out right now on my PayTrade account, and I can definitely see the less emotional, less stressful in this particular strategy. Um, although you won't get the whole, 100+% swings that you see online, but hey, slow and steady wins the race, right?
Oh yeah.
So,
They're really good. If you just follow this guy. And
so
I'll post the other one, the one that I watched from him that got me into trading spreads.
okay, yeah, post it on there.
Where'd you
I'll
post it?
take a look. Is that
Where'd
the?
you post it at?
It's on the main chat.
Chat? Okay. This one. It was like from 3 years ago.
Oh wow.
That's what I followed at first. That's when I started learning about spreads.
Hmm.
But then the thing about it is, if you learn about spreads, then it builds your confidence to buy calls and just puts eventually, because you're
Hmm.
gonna be like, oh, I've seen this so many times, and then that's when you go like, ah, I'll just buy calls, I'll buy puts, you know.
Yeah.
But if you can stay in the game for longer, then it's gonna be better.
Yeah, you get to see more patterns,
Hmm.
behaviors, and
Correct.
building your technical analysis experience.
Yeah, and he teaches you technical analysis in this one for sure.
It's awesome. Awesome. Right on,
Because
right
you'll
on.
see like his way of the mind, his way of thinking, where you're like, oh, okay, that kind of makes sense. How they did it that way.
Hmm. Yeah, definitely. All right, well,
Hmm.
hopefully you guys can make sense of this. In the beginning, this was very confusing and very foreign to me, but I've been hearing it too many times that even my sister, that's all she does now. She does all just credit spreads, credit or debit spreads.
Oh yeah, it's profitable until you realize like you're really good at reading the chart, and once you're master the chart, then you don't really need the credit spreads anymore unless you just want to make extra money on the side.
Yeah, it's like insurance money.
Yeah, it's insurance money. A lot of people I know will sell a put credit spread to just pay for their calls. If
Yeah,
that even makes sense to you. So you'll sell your puts because that's like 100% win rate, and then you'll buy out of the money calls where you think it's gonna go. So even if it expires worthless, you get paid in the put side.
right. That's crazy. Funding your
It's
own
like a
trade.
yeah, exactly. It's like a free trade. You're funding it by yourself.
Nice. Cool. All right, any
Cool.
question, everybody, before we take off? All right. Sounds good. Well, thanks for hopping in, guys. Thanks, Brian. And
Yeah.
I'm definitely going to be geeking out on those videos to add on to my tool belts to, passive income and easy money.
See you guys on Thursday, right?
Yep. We'll see you guys tomorrow for trading.
Thank you.
Okay.
Yeah, thank you.
See you, everybody.
Next.